Hello everybody, Houston here. I hope you guys are doing well, having a great day or a great night. And before jumping into the charts, don't forget to smash the like button, share with your friends, and subscribe as well. And let's do it. So first things first, let's start from the macro and then we go to the micro. You guys know the drill. So first things first, let's take a look on volume. Yes. So we had raging volume till July last month. Right now we have catching up volume. We still have 18 days to go, so we have to see how this one is going to behave. Because if we keep going up and volume stop coming in, this can be a problem, like we saw with many other coins and tokens already. Okay, and remember, this is not only about Vechain, it's about the whole market. Okay. Let's take a look on OBV. Where is OBV? Okay, so we have the bullish divergence, at least for Binance. And let me see here. Yes, so the volume we had today is far bigger than the one we had back in, let me see, August 18. And this is very interesting because it was right before the harvest. And yeah, so another thing, some folks, they look at this when they are trying to understand and they expect a immediate move. Okay, so they want, it's like this, oh, it has to play out now. And that's not how it works, especially when it comes down to volume. Okay, the volume keep working in a way that such pressure is created like a storage that sometime it must be released. Okay, that's when we have big bull breaks, big bear breaks, also the outcome for bullish and bearish structures as well. Okay, so have in mind, sometimes we will see things, for example this week, but these things are only going to play out like in 1 month or maybe 2 months or maybe 6 weeks, and this is how it works. Okay, so have this in mind. Let's take a look for Fibonacci. Yes, a second. So if I'm not wrong, this is a 80% attack. Let's take a look. Yes, it was a 80% attack. Bullish. Yes, it is bullish. But we also have other things that we have to take a look. Let me show you. So despite the strong bull move inside the 80 level for Fibonacci, we have to watch out for this thing right here. I mentioned this for XDC in the last video, and now let's take a look. Just a moment. Let's, yeah. So two. Okay. So this guy right here, as you guys can see, I'm measuring the tail to the body. Okay. The price action we had inside back in the day was inside bar trade. Okay, and then the bulls broke bullish, and let's use a line to address this level as well. Okay, so we broke bullish from the previous inside bar. Now let's take a look on the other one, I mean the next one. And now let's, so, and then again traded inside bull break again. Just a moment. Hold on. Just a second, please. Okay, and now let's go for the last one. Yeah, so one, oh, just a sec, let me see. Okay, we had another one here. So let's go. Yeah, let me use one line for both. Okay, perfect. And now let's go for the last one, the current one. Okay, so what you guys are seeing here, this is what we call inside bar trade. When the next candles is still trading inside the previous candle. Sometimes this is bullish, other times this is bearish. And the thing that we have to acknowledge here is this. We have the previous rejection, right? Which is expected, but not a great thing for the buyers. Right after, another bullish attempt, a marginal higher high, which can be bearish. So far, we still don't know. Can be doesn't mean it is. And yeah, so this is still an inside bar trade, and trading inside previous rejection, it's all the way bearish. Okay, but again, this is the monthly chart, which means this candle still have 18 days to go. So we still can go up all the way, or still can trade inside this range before a outcome. But yeah, so now let's take a look on the other thing here. Let me see. Yeah, so we don't have, I think, hyperbolic move already, but maybe, because so far since, let's see, since March, we still didn't had any significant correction or pullback or a proper level for the bears to do their thing, because we need the bears before we keep going up, because we know nothing goes up forever and nothing goes down forever, and without the joint points, every single parabolic move doesn't end well. This is a fact well known in all markets. Okay, so we have to watch out because it's overextended. Half month, 1, 2, 3, 4, 5. It's 5 plus 15. So in my humble opinion, it is starting to get dangerous. Okay, because everything is accounted in the market. This is the words of Charles Down, and I agree with him, because the markets keep following the same mechanics over and over and over again. But most people, especially the new ones, they are not familiar with these things. Okay, so now on the weekly, not a big deal. This kind of behavior here, it's very similar with XDC. Okay, very similar, like 90%. Yeah, if you, I'm not going to break down everything here, but if you guys want to understand better this scenario, you can take a look on my previous video. I posted this yesterday. Is a XDC technical analysis 004, if I'm not wrong. But yeah, so that's a strong move up. But as we talked about, the range for the corrections are very small, and as you guys can see, so the first one we have to really acknowledge here and watch out is this one here. So try to follow me, please. Small bearish activity, small bearish activity. The bearish activity is starting to go higher or increasing, and then right after, very close, again bearish activity again. Okay, so if we try to measure here momentum, it's somewhat fading. Okay, But we have to see how this one is going to play out. And just a second, it's on the monthly, yes. And I was forgetting something here. Let me use my tool. Yeah, so as you guys can see, this range right here. So this is not about support and resistance, okay? If you're not familiar with my research, my job, and even this tool, how this tool came up, you can check my previous videos for more clues about it. But yeah, so we are using it, and it's 100% accurate, and we also use this kind of tool for our trading setups. So we end up rejected 2 times from this level, and this was the first time it happened since March 1st. As you guys can see, we made our way here, we made our way again straight up, and now for 2 times in a row we end up rejected from 0021, because this is a key level. It's not a like a resistance level. No, in my view, in my way, my method, I don't acknowledge support and resistance levels. Okay, we also don't use stop loss. So those are things very simple that most people, they are not familiar because they never heard about. So they think it can be somewhat weird or a thing from the other world, but it's not. Very simple things. So folks, this is a dangerous place to buy. This is not financial advice, you guys know the drill. But buying here, longing here, is not only buying a quote resistance level. It's also jumping in a dangerous spot. Okay, very dangerous spot. So now let's go for the weekly again, and then we keep going down. Here you can see this in a different way. So rejected on the first, on the second, and on the third. Okay, you have to watch out. Let's take a look on the 3 days. So okay, so it's not bearish, no, but this will break here from this previous pattern here was very weak and small. Okay, as you guys can see, we are not having all those power candles anymore. Then we had here and here again, but on this bull break, not a big deal. Okay, which means the smart money is not risking at buy at those levels, which makes sense. Okay, just a second. Also, we have a possible scenario for a rising wedge. Okay, we have the DNA of a rising wedge, but it's not it's around 40% developed. So we are going to know soon how this is going to play out, the nature, the outcome, and the targets. Okay, before clear scenarios, there's no way to be accurate here. We don't try to guess, because each single new candle can change the whole story. That's a thing that when people are looking for technical analysis, trying to understand it, they have to acknowledge. Okay, let's go for the daily. So yeah, not a big deal. They are still buying the lower section of the candles. As you guys can see, each single one. And also, I highlighted back in the day, most of these trades are made by bots, believe or not. And another thing, 95% of all trades in the crypto market are made by bots. Only 5% less are the retail investor or trader. Okay, let's take a closer look for the 4 hours. So okay, we have something here, just a moment. So we have a possible head and shoulder scenario, which is not 100% symmetrical, but still have odds for this kind of bearish pattern to play out. And also this kind of behavior here, see, we go up and then we make a pit fork here, which was ascending in nature. They kept buying the support level, quote, support level, okay, because I'm using the words they use, okay. So we are reading the market with their eyes, okay. So again, pit fork here, bearish, buying the support, bear break, another bearish behavior. They kept buying. Not 100% retrace here, but another bear break. Okay, because in the next rally, we're still trading below the last high and the previous one as well. If we had a different behavior here, this could end in a falling wedge. But still, the target for this one would be below this level, which can be a problem. Okay, so we need more evidence to understand this behavior here as well. And so far, it's not 100% clear. And again, remember, we read what is written. And if it's not there, we wait. Okay, let's go for the 2 hours. This kind of formation can lead to a move up. Okay, higher low, round dome right here. But again, these are scenarios that are not reliable for analysis. We acknowledge them, we read, and we try to make more sense of it. Okay, but yeah. So this is the kind of scenarios we don't trade. Okay, we acknowledge, we read, but we don't trade. Let's go for the 1 hour. Okay, not a big deal here. And let me see if I can show you the bearish, not the bearish, the bot's behavior. Okay, so here we can see it already. So all these long wicks, over and over and over, both sides. Can you guys see? Those are all bot activity, which is being made by the exchange. Okay, I was surprised to know about people who believe the market moves when the average Joe and Mary buy and sell. No, this is not true. Never was. The markets are made by the market makers. Yes, the market makers, big players, and they are in control. Okay, this is not average Joe or Mary behavior at all. Okay, so guys, I believe this is it for now. I think I covered everything, and yeah, so let's keep watching to see how this one is going to play out. But again, dangerous place. Okay, and yeah, so guys, I hope this video was can help you in some way, the way you read the charts, or improve your skills, or even improve your trading setup, or even if you don't have one, maybe you're going to have one soon. And yeah, thanks for your support, thanks for your patience, thanks for your time as well. And please don't forget to smash the like button, share with your friends, subscribe as well. You can do it for free. It will only take maybe 15 seconds, 20 seconds. And yeah, so I will see you guys soon. Have a nice day or a nice night, and see ya.